income tax law and practice. We are going to see about deductions under sections 80E to section 80U except section 80G. First is deduction under section 80E. Deduction in respect of interest on loan taken for higher education. And eligibility are: only an individual can claim deduction. The assessee can claim deduction for the interest on loan taken for himself or spouse, children, whether dependent on him or not, or the student for whom the assessee is the legal guardian. Regarding allowable deduction, deduction is allowed for the initial assessment year and 7 subsequent years immediately succeeding the first assessment year, or until the interest is paid in full, whichever is earlier. Regarding the term higher education, the term higher education means any course of study pursued after passing the senior secondary education or equivalent. Example: Mr. X has borrowed ₹7 lakh for his son's MBA program at a Mumbai college from State Bank of India in 2014. It is repayable in 10 installments of ₹1 lakh starting from the previous year 2015 to 2016. ₹70,000 is the principal amount and ₹30,000 is the interest amount. We are asked to find out how much and how long he can claim deduction. The answer for this problem is: Mr. X is paying interest of ₹30,000 on his son's higher education loan. So in this problem, the assessee can claim deduction from the initial assessment year of 2015 to 16 to the next 7 years, that is 2022 to 23. The next deduction is deduction under section 80EE. So this deduction is in respect of interest on loan taken for residential house property. Only an individual can claim deduction under this section, and regarding the amount of deduction, it is up to ₹50,000 every year till the repayment of the loan. Conditions to be fulfilled by the assessee to claim deduction under this section are: the loan has been sanctioned by the financial institution between 1/4/2016 and 31/3/2017. The amount of loan sanctioned for the purchase of the residential house property should not exceed 55 lakhs. The value of the house property should not exceed ₹50 lakhs. And the assessee should not own any residential house property on the date of sanction of loan. The next deduction is deduction under section 80GG. So this deduction is in respect of rent paid and eligibility, and any employee who does not receive house rent allowance from his employer or a self-employed person can claim deduction under section 80GG in respect of furnished or unfurnished residential accommodation. To claim this deduction, the assessee should not own any residential house property. Regarding the amount of deduction, rent paid minus 10% of the total income, or 25% of the total income, or ₹5,000 per month, whichever is less, can be claimed as deduction. How to calculate total income? Total income is equal to gross total income minus long-term capital gain minus short-term capital gain on transfer of shares through a recognized stock exchange, that is under section 111A, and minus deductions under section 80C to 80U except under section 80G. The next one is deductions under section 80GGA, that is deduction in respect of certain donations for scientific research or rural development. The payment must be made to a research association or to a university, college, etc. for scientific or social or statistical research, or to an association or institution engaged in rural development or training persons for such programs. Regarding the amount of deduction, 100% of the amount paid to such institutions can be claimed as deduction. The next one is deduction under section 80GGB. So this is in respect of contributions by companies to political parties. Deduction is allowed to an Indian company that has contributed any amount to a political party during the previous year. And the amount of deduction is 100% of the amount paid by the company to the political party can be claimed as deduction. No deduction is allowed if payment is made in the form of cash. Deduction under section 80GGC. This is regarding deduction in respect of donations to political parties. Deduction is allowed to any person except local authority or an Indian company. Regarding the amount of deduction, 100% of the amount paid to political parties can be claimed as deduction, and no deduction is allowed if payment is made in the form of cash. Deduction under section 80QQB, that is deduction in respect of royalty income of authors. Eligibility to claim deduction: an individual who is a resident of India, an author including joint author of books being a work of literary, artistic or scientific nature. Regarding the quantum of deduction, 15% of the value of such books less expenses related to royalty income, or rupees 3 lakhs, whichever is less, can be claimed as deduction. Let us see a problem with royalty income. From the following information, compute the total income of an author. Royalty on a book for college students on rupees 5 lakhs at 20% is rupees 1 lakh. The rate is missing in the PPT. So the value of the college books is rupees 5 lakhs and the royalty income is 1 lakh. That is 20% on 5 lakhs, which is equal to 1 lakh. Expenses incurred to earn the royalty is rupees 10,000. Other income rupees 5 lakhs. Now we are going to calculate the total income for the assessment year 2019 to 2020. First take the royalty income, which is 1 lakh. From the royalty income deduct expenses incurred to earn royalty, that is 10,000. So the balance income is 90,000. To this add other income, that is income from other sources, 5 lakhs. Therefore, gross total income is 5 lakhs 90,000. From this gross total income, we can claim deductions under section 80QQB, and the amount of deduction claimed is 65,000, and the total income comes to rupees 5 lakhs 25,000. Now let us see the calculation of deduction under section 80QQB. Value of books is equal to rupees 5 lakhs and deduction is equal to 15% of the value of books minus expenses incurred to earn royalty, or rupees 3 lakhs, whichever is less. So first find out 15% of the value of books. Value of books is 5 lakhs. Apply 15% on rupees 5 lakhs. The amount is rupees 75,000. From this 75,000 deduct expenses incurred to earn royalty, that is 10,000. So balance 65,000. Deduction under section 80 QQB is rupees 65,000 or rupees 3 lakhs, whichever is less. So we are going to claim rupees 65,000 as deduction because it is a lesser amount. Deduction under section 80 RRB, that is deduction in respect of royalty on patents. An individual can claim deduction under this section. He must be a resident in India. He must be a patentee. He must receive income by way of royalty in respect of a patent registered under 31/3/2003 under the Patents Act 1970. And regarding the amount of deduction, the whole of such income or rupees 3 lakhs, whichever is less, can be claimed as deduction under section 80 RRB. The next one is deduction under section 80 TTA, that is deduction in respect of interest on savings account. An individual or a Hindu undivided family can claim deduction under this section. Deduction on interest on savings account shall be allowed if the amount is deposited in a bank or a cooperative society engaged in the business of banking or a post office. Regarding the amount of deduction, whole of such income or rupees 10,000 in aggregate, whichever is less, can be claimed as deduction. Deduction should not be allowed under this section for senior citizens. Deduction under section 80 TTB. This is regarding deduction in respect of interest on deposits in case of a senior citizen. Only senior citizens can claim deduction under this section. Deduction on interest on deposits shall be allowed if the amount is deposited in a bank or a cooperative society engaged in the business of banking or a post office. Regarding the quantum of deduction, whole of such income or rupees 50,000 in aggregate, whichever is less, can be claimed as deduction. The last deduction is deduction under section 80U. This is regarding deduction in case of a person with disability. An individual resident in India and who is certified by a medical authority to be a person with disability can claim deduction under section 80U. Regarding the amount of deduction for disability, rupees 75,000, a flat rate of rupees 75,000 can be claimed irrespective of the expenditure, and for severe disability, a standard amount or a flat rate of rupees 1,25,000 can be claimed as deduction of the expenditure.